feel like this is the point where we have to put our obligatory Austin Powers laser beam reference. No, folks, we're not talking about these lasers.
No, not freaking laser beams. We're talking about lasers used in networking infrastructure.
Hey everyone, welcome back to Chipstock Investor. Hope you're having a great week so far. We're here to talk about a company that we've been getting a lot of questions about because Lattice Semiconductor's CEO, James Anderson, was recently announced to be departing from that company and has taken over that role over at Coherent. Coherent is not a company that we've done a deep dive into until now. So we're going to talk about what we found, what we uncovered with our deep dive in Coherent.
Kasey, I think the folks probably want to hear from you first about Lattice because that was one of your top chip stock picks for 2024. Was doing fairly well. It's kind of reversed course back to where it was at the start of the year. Kasey, what do you think about Lattice?
Well, Nick, it is true that one of the key reasons that I liked Lattice Semiconductor so much was part of that management team. James Anderson was always very excited to talk about the launch of new products. He was definitely helping Lattice be a very focused pure play in the FPGA market. And so ultimately, I guess we'll have to see what the new CEO has in store for Lattice. Issam El-Ashmawi is been appointed as the interim chief executive officer. He was the chief marketing and strategy officer, has been with Lattice since 2018.
So I guess what you're saying is, let's just wait and see.
Yes, basically. I think this is way too soon to tell if there's going to be any issues with this management switch up. We still have high conviction in this business as a whole.
One other upshot I see from this is Mr. El-Ashmawi, as the chief marketing and strategy officer, has had a lot of experience with the new product lineup that Lattice has unveiled the last couple of years. So as far as I can tell here, there shouldn't be much disruption to that. Anderson got the company in pretty good position the last couple of years. I don't think there's going to be a ton of disruption to the go-to-market strategy and execution of the strategy at this point, but I guess we'll just have to wait and see. As for Mr. Anderson moving over to Coherent, maybe a little preview here on our final conclusion about Coherent. One of the reasons Anderson was brought over to Lattice back in 2018 was to help simplify the product lineup and then execute on the most critical growth verticals for the business. Coherent is pretty messy. I think we both come to that conclusion doing another dive into this and now a public deep dive into Coherent. There is a lot going on. And no doubt that's exactly why Coherent has brought Anderson over after their previous longtime CEO has retired. They need to simplify things to get themselves in position for this new AI super cycle.
They absolutely do. Before we go into exactly what Coherent does, let's take a peek at one of the main reasons that we think Jim Anderson went to Coherent. And it may be simply that it was a better paycheck. If you take a look at the operating revenues between the two companies, Lattice Semiconductor, very small in comparison to Coherent. Lattice Semiconductor in the last quarter, just under 700 million, and Coherent at nearly 4.6 billion.
Yeah, business that does almost 5 times as much revenue, obviously probably able to dole out more money to its CEO. Okay, enough said about that. Back to Coherent. Where does this company fit on the semiconductor industry flow?
You can see we have that integrated device manufacturers circled there on the left of our industry flow chart. Coherent both designs and manufactures everything they make. Modules, chips, you name it, we're going to talk about it. What are some other integrated device manufacturers? Just to put this in perspective, companies like Intel, Micron, Samsung, Qualcomm, TI, and Broadcom, they are also in this category of IDMs.
Yeah, quick note, maybe Broadcom and Qualcomm have kind of moved to a fabless model where they don't manufacture that many of their chips. But if you do dig through their 10Ks, their annual reports, you'll find that they do still have some of their legacy IDM business there where they do retain some in-house manufacturing. At any rate, an IDM is sort of the old, ancient industry standard from when the semiconductor industry got its start half a century ago, where a company was vertically integrated from design to manufacturing. We've covered this before in past videos on why that has changed, but the short story is it is really, really expensive to design and manufacture chips. So a lot of companies have chosen to specialize into doing one or the other in the recent, say, 2 decades. So let's move specifically to the optical and photonics, or as we'll talk about, maybe just simply, we're going to call this laser IDMs. Coherent, as is typical with IDMs, it's an old industry, so they have a lot of competitors from decades ago when the barriers to entry were perhaps a little bit lower than they are today. Kasey, let's talk about these lasers and their application in optical and photonics devices. No, not freaking laser beams. We're talking about lasers in particular used in networking infrastructure. They're also used heavily in manufacturing, for example, to cut things at very high precision. And then Kasey, you have some experience with lasers in healthcare.
I can think of a couple of good examples using CO2 lasers and in various eye surgeries, or perhaps in small ear surgeries, even skincare, lasers come into play. Lots of applications for these laser beams.
Yeah, and it's going to get more complicated here, folks, as we delve further into this business. But a brief recap from our semiconductor industry flow video at this point, 6 months ago. How does an IDM actually make money, including Coherent? They design and manufacture chips. And then, especially for Coherent, not just the chips themselves, but the chip systems and final products. And then they market those devices, and then they sell them to either a product partner that uses the module in a more complex design or a more complex product, or they sell it to the actual end customer as a ready-to-use product. So especially for a company like Coherent with this very, very wide portfolio of products, a lot of what they do actually ends up being custom engineering to meet a specific need of a customer. This is why today an IDM tends to be a pretty tough business to compete against, especially if you're a startup. So barriers to entry tend to be medium to high. That doesn't automatically mean this is a wonderful business model to invest in. One of the reasons for that is there is lots of competition.
Yes, taken from Coherent's annual filing, you can see all of their competitors. The first one on the list is none other than Broadcom. They have many other competitors. You can see Lumentum, MKS Instruments, Wolfspeed. It's a highly fragmented industry. Let's talk about the types of lasers that Coherent designs and manufactures.
So Coherent breaks its business down into three parts. The first, let's just say, is the lasers themselves. And these are modules, actual laser modules. And so at a very high level, a laser is created when an electric current is applied to a semiconductor material, and that electrical current excites the electrons in the atoms that make up that substrate, and then they give off a photon, light. So lots of applications for these things. Not long after the semiconductor industry got its start, besides just electronics, it was discovered that a byproduct of applying electrical currents to semiconductor material is, in fact, light. A lot of customers for Coherent's laser segment span everything from manufacturers to aerospace and defense to healthcare companies. Segment number two, this is where things really kind of get a bit odd, but this is the materials business. They address a lot of businesses in the industrial space, including manufacturing. Two things we'll call out here specifically. They're at the top, engineered materials and laser optics. You see some of our semiconductor manufacturing equipment favorites, Applied Materials there in the top right. Whenever you have precision manufacturing equipment, you're going to need some very high precision lasers and optical equipment to take measurements. And then third from the bottom, new ventures and wide bandgap electronics. Coherent actually does have a segment. It's now a subsidiary that operates in the silicon carbide, or SiC, substrate of semiconductors. We'll come back to that here momentarily. Apple also listed as a customer in the bottom right. Let's move on to the third segment here. And before I show you the segmentation from Coherent's 10K, here's total revenue by segment that Coherent reports. And you can see networking at nearly half of revenue versus the actual laser modules at just under 30% and materials at just under a quarter of the total. And when we talk about networking, let's take a moment and focus specifically on that middle segment, datacom transceivers, especially in light of cloud and data centers and AI, Nvidia. Of course, we put Nvidia in the title, because where would any company like Nvidia be these days without photonics technology?
That's right. All of those data center servers have to be connected to one another. You can see the optical port in blue and then the module itself in the silver case.
So the cable itself, depicted there in yellow, you can think of that as the highway or the freeway that the actual light signal travels along, that carries the data between two different servers or two different parts of the data center. And you can think of those yellow lines as like a tubular mirror. And the way the light is able to travel in those bendy, twisty lines is the inside of those cables are basically coated in a mirror. And so the light just kind of reflects off of the surface of that until it meets the transceiver at the other end. And so Coherent makes these transceivers. That's why they have Broadcom listed as one of their top competitors. Oftentimes when we're discussing companies like Broadcom, we're talking about the chips that actually process the data, but these transceivers are the very critical part that transmits and receives the data that is being sent via those light signals.
Interesting, Nick. We talked a lot about Marvell also being a designer of these modules. It's interesting that they don't call out them as a competitor. Is that because Marvell is a fabless company versus an IDM?
That could be. And also, it's probably just that there are just so many competitors in this space that they just can't list them all in the 10K. Marvell also got into this particular part of the market more recently via some acquisitions of its own. So that could also be the case as to why it's not called out specifically. But the interesting thing about this is when you think about all of these new AI applications, these new AI data centers that NVIDIA is helping build, you end up with lots of new networking communications growth opportunities. And so Coherent has this broken down by different transceiver type. We've highlighted a couple of important takeaways from this chart. Currently today, one of the leading markets for coherence lasers is that VCSEL. On the left-hand pie chart, you can see that in the light blue. VCSEL stands for Vertical Cavity Surface Emitting Laser. To mention that one of Coherent's large customers is Apple. Apple purchases a lot of these products, as does a lot of Android devices. If you have some sort of facial recognition on your device where you can unlock it just by pressing a button and putting your face up to the phone and it automatically unlocks, that's laser technology, VCSEL technology, that is basically scanning your face and unlocks your phone when it recognizes who you are. But you can see as we move to the right, the transceiver opportunity is going to dramatically change for Coherent over the next 4 to 5 years. The VCSEL market is going to get a lot smaller for Coherent. And what is going to take over are these, especially these EML used for AI transceiver devices. So you can see there on the left, EML AI, currently just about 12% of this particular market segment for Coherent, and expected to expand dramatically to 33% over the next 4 to 5 years. Couple of general terms here to define. EML stands for electro-absorption modulated laser versus the more traditional DML or directly modulated laser. In layperson's terms, EML is a type of module that can handle much higher data rates and longer distances. So if you think about all of that cabling that goes through these AI data centers, sometimes many, many miles and kilometers of cable interconnecting all of those AI servers, EML becomes a natural fit because of the length and distances data has to travel within that physical footprint.
Well, Nick, to be completely honest, that is a little confusing for my little brain. But I think what ultimately we're trying to get at here is there is more data transfer than ever now and in the future that is only going to get more and more congested. And so if you think about this as a highway or a freeway system, when you have more traffic, you need bigger freeways. You need to add more lanes so that traffic can get to its destination in a much more efficient fashion. And that's what ultimately what this cabling, these type of lasers is doing. It's able to travel faster and for longer distances. Does that sound right?
Yeah, I think that's a good way of summing it up. So EML for AI applications, big opportunity for Coherent. Now, Kasey, let's backtrack just a moment here, because all this AI and maybe a little bit of Coherent trying to ride the coattails of Nvidia and the new market that it has helped spawn, it all sounds very exciting if you're an investor. But let's backtrack here for a moment and talk about Coherent and how we actually got here today, because this business was largely built via merger and acquisition, especially over the last decade and a half or so. You see this slide, they talk about their ample compound annual growth rate. However, that does deserve an asterisk because Coherent was actually a company previously known as 26. Now, 26 was an old company founded back in the 70s. Its name actually refers to the periodic table, groups 2 and groups 6, which we've circled here on the periodic table, being the type of materials that they used to manufacture their first original products many decades ago.
You may be wondering why 16 is circled and not 6. Apparently, this is because the whole middle section of this, sections 3 through 12, were actually discovered much later. And so they've inserted those into the periodic table since their discovery. And so that is why 16 is circled. It used to be 6.
Yeah, ask your chemistry teacher about this.
I almost failed chemistry.
Okay, so back to the business. Coherent was previously known as 26. They made multiple acquisitions to get into all sorts of stuff to steadily expand their IDM footprint, culminating in the 2022 mega merger between 26 and Coherent, formerly competitors, formerly peers in the IDM space, $6.6 billion acquisition. And when 26 completed the acquisition of Coherent, they adopted the name, creating this new optics and photonics IDM giant. And that's why if you look at historical revenue breakdowns for Coherent, you see these laser module revenues popping up in 2023 over the last trailing 12 months. Well, that's in large part because of the merger between 26 and Coherent. We reference all of this to make the point that this is a very messy business and goes back to the original thought that this is why Coherent went out and hired Jim Anderson. He has experience. He did a fantastic job at Lattice when he took over in summer 2018 of simplifying the product lineup and refocusing the business on its highest growth opportunities, and as a result, increasing profit margins. So we've talked about the AI story for Coherent, but let's talk about how the waters get muddied a little bit. And Coherent has already tried to help clean this up a little bit ahead of Anderson taking over. Now, in that previous slide of the acquisitions that were made over the last decade and a half, back in 2016, Coherent acquired a small startup called EpiWorks that was involved with, at the time, a seemingly very promising new semiconductor substrate called silicon carbide, or SiC. Not exactly Coherent's main primary focus at this point. So they shuffled things around a little bit late last year, early this year.
You can see that they've made their silicon carbide business a subsidiary of Coherent. They still retain 75% ownership in the company, but then they have Mitsubishi Electric at 12.5% and Denso at 12.5% in the silicon carbide partnership. Mitsubishi and Denso invested $1 billion combined into this new subsidiary in exchange for that combined 25% non-controlling interest in the business. And related to their silicon carbide business, they also have been outing their lasers for EV battery welding. It's called an adjustable ring mode laser that has a couple of features that stand out for Coherent versus some of their competitors. And you can see a few more applications that lasers are used in the manufacturing of vehicles, especially electric vehicles.
We also already mentioned the semiconductor manufacturing equipment part of this market that Coherent addresses with its laser modules, Applied Materials being one of their top customers. You can see the multiple segments of the market that they address with all sorts of materials and all sorts of modules that they sell that ultimately get installed into the final equipment. For instance, an Applied Materials makes and then sells to someone like Taiwan Semi Manufacturing or Intel. Again, we're showing you all of this to illustrate the fact that Coherent is not as focused a business as we would typically like to see for our personal investment, but perhaps bringing Anderson in can change that and refocus the business on its most critical growth markets. But Kasey, Anderson's got his work cut out for him, right? Take a look at the balance sheet.
Yes, total debt is just under 4.3 billion, less than $1 billion in cash. And there's one other factor to consider. Just over 15% of the business is owned by Bain Capital.
And along with that over 15% equity stake that Bain Capital got in Coherent. Coherent owes them a 5% dividend on that equity stake over a 4-year period. And then those preferred shares will ultimately convert into ordinary shares, into ordinary stock, which you can purchase via ticker symbol COHR. Pretty messy structure here that needs to be cleaned up.
I am wondering, Nick, why do some generalists like Applied Materials, and could Coherent be classified as a generalist when it comes to lasers?
Absolutely. I think you're absolutely right, because Applied Materials is one of our favorite generalists in the semiconductor industry. But there does come a point where being a generalist, like Applied Materials, enables them to weather all sorts of market conditions. We've talked about how during the bear market, Applied Materials was able to pivot to, at the time, what was a high growth automotive industry, to continue remaining flat while many of its peers shrunk in size. But then there comes a point where you can be too much of a generalist and it becomes diversification. And I think that's what we're looking at here with Coherent, is maybe this is a diversification issue at this particular point in time. You can see the operating margins fairly lackluster, even in pretty good boom times. And then, of course, it is a cyclical business, as you'd expect from any manufacturing company. But during those cycles, it's not like the broad portfolio of tech that they have is helping them outperform the market during these down cycles.
You may notice that we have some new charts from our friends over at FinChat. They have excellent charting analysis tools that helps us as investors understand what actually is going on in a business. That is what is helping us do this deep dive into Coherent. So check out the link below in the description that gets you 15% off a membership. Nick, tell me about their return on invested capital. This also looks kind of messy.
Yeah, this is very just okay return on invested capital. ROIC measures a management team's ability to allocate money to different projects that then go on to generate positive investment returns. So think of this as, if you invest $1 today, what will the investment generate you next year? So at 6%, that dollar generates you 6 cents. Or in a really good time, like 2017, upwards of 10%, that dollar generated 10 cents. This is an average across the business and does not help us parse out what exactly is outperforming within a business and what parts of the business are underperforming. That is where trusting the management team comes into play, and why we think Coherent maybe is actually worth keeping tabs on, because if Anderson is able to replicate what he did at Lattice, this ROIC chart could get a lot better in the years going forward as they kind of dissect what's working for Coherent and maybe what's not working so well, and then whittle the business down to those most crucial, important growth markets. For example, the AI networking for data centers.
Okay, so there is our take on Coherent. We're going to keep an eye on it. I think that's ultimately the conclusion that we came to. Lattice Semiconductor, also, we're going to just keep tabs on. It's a company that we still have conviction in, but we need to see what management does from here on out. Make sure you are subscribed to the channel. We have much more coming your way. We're going to do our mid-year review for our non-chip stock picks for 2024, as well as our chip stock picks for 2024 in our upcoming videos. So make sure you stick around for those. And if you're interested in our show notes, video notes, Discord access, we have an upcoming live event, which is a members only, semiconductor insider only event coming up on Saturday. If you're interested in that, it's only $5 a month. It's a great value. So check it out below. We have been told that likening our membership to Lululemon is not helpful, so I apologize, but we'll just say it's a good value. We think that it'll be worth it for you. We'll see you all again soon at Chipstock Investor.